And then just in the last 30 or 60 days, we've seen a big run up in the crypto prices. So now I'm sitting here thinking, okay, maybe this crypto winter is starting to thaw. We don't know exactly what's going to happen in the future, but the ETF applications that have been filed, about a dozen of them by the biggest financial institutions in the world, is a huge endorsement. It's going to bring in new pools of capital. Next year, I think the move to layer 2 solutions is going to improve the scalability of crypto enormously. I think that's going to be a huge thing, kind of like moving from dial-up to broadband on the internet. I think there's a Bitcoin halvening next year. The emerging regulatory clarity, 83% of the G20 countries are working on crypto legislation now. So I think all these factors are going to lead to hopefully a good outcome next year for crypto.
Less than 2 weeks after positing that Bitcoin may be the key to extending Western civilization, Coinbase Chief Executive Officer Brian Armstrong has given 4 reasons why he believes the 2024 and 2025 cryptocurrency bull run will be great and generally positive for digital assets. According to Armstrong, who is now being hailed as crypto's last big man standing, during this bull run, the crypto industry will be getting 4 great things, the absence of 3 of which could be said to have limited the industry's potential, especially during the last bull run. They are the approval of a spot Bitcoin ETF by the U.S. Securities and Exchange Commission, Layer 2 scaling solutions, much-awaited regulatory clarity in countries like the United States, and the 2024 Bitcoin halving event. For instance, the approval of a spot Bitcoin ETF will incentivize thousands of institutional investors currently waiting on the sidelines to pump tens of billions of dollars into digital assets like Bitcoin, Ethereum, and others. Some crypto analysts, commentators, and analytics firms have estimated that during the next 12 to 18 months after the SEC gives the green light, that massive figure could increase by folds, going from about $30 billion to over $300 billion in new capital for the industry. Meanwhile, Layer 2 scaling solutions will provide a promising path forward to overcome the scalability limitations of Layer 1 blockchains, allowing for faster, more efficient, and cost-effective transactions. With 2 stumbling blocks out of the way, all that is left for the industry to conquer is regulatory clarity, especially in the United States, where agencies like the SEC and lawmakers like Senator Elizabeth Warren continue to do everything to circumvent the continued growth and existence of the cryptocurrency industry. Fortunately, industry leaders like Brian Armstrong are actively fighting against the malicious narratives, as we will prove in the other half of this video, which discusses the latest scuffle between Coinbase, SEC Chair Gary Gensler, and the U.S. judicial system. This promises to be an insightful and illuminating video featuring a recent interview between Brian Armstrong and Tobi Lütke, a Coinbase board member and CEO of Shopify. Please stick around to the end, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more crypto-related videos. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks, and enjoy the video. During the first half of the conversation, Armstrong discusses the genius of the Bitcoin white paper and how it enticed him to become such a major force in the industry.
When I first read the Bitcoin white paper, this was in December of 2010, and if any of you haven't read it, take a read through. It's pretty complicated, it's pretty dense. I had to read it many times to try to fully tease it apart and understand it. But it is a brilliant computer science breakthrough at the fundamental level. And it was kind of handed down to us in this perfectly formed thesis. And we still don't know who did it. That by itself is kind of a bizarre thing. But I guess if you fast forward, or go back even a few more years. So I had studied computer science and economics. I didn't know how those 2 things might interact in the future, but I was interested in both in college. I had spent a year living in Buenos Aires, Argentina, so I happened to get a sense of what happens to a country when it goes through hyperinflation. I was an early employee at Airbnb, and I was a software engineer helping them kind of get payments going into and out of 190 countries around the world. I saw how difficult that was. And there was a couple experiences like that, which at the time, I would not have been able to connect any kind of thread through all of these things. But all those things primed me for that December 2010 moment when I first read that Bitcoin white paper. I think I saw it on Hacker News one day. And I remember thinking to myself, this feels really important. I didn't quite know how it would all play out, but I felt like this might be the most important thing I've read in a long time. And so, I started, and I should say also, I was always very excited about this idea of economic freedom. How could we make property rights and free trade and sound money sort of, some places in the world had that, others didn't, and it was a huge detriment to those places and the citizens of these countries that did not have good economic freedom, good financial infrastructure. And so I remember seeing that Bitcoin white paper and thinking, okay, this could be as powerful as the internet. It's this global decentralized system. Nobody controls it. That's what gives it kind of this permissionless access. It can't be manipulated. And if we use this kind of new decentralized protocol, we could actually inject good, healthy financial infrastructure into all these countries around the world to increase economic freedom. And so that was the original idea. I remember thinking that I was crazy, actually, because I couldn't stop thinking about it. I started to go to some early meetups in San Francisco, but I talked to a bunch of my friends about Bitcoin at that time, 2011, my smartest friends, and they were like, I don't get it. You know, it's this, why would anybody use like this made-up money? It seems like you're involved in some scam, or what is this? You know, Bitcoin's not going to work out. And so I had a lot of self-doubt about it at that time. I was like, this feels really cool to me. Something about it's very interesting, but most people I talked to weren't excited. And so I had to take a little bit of a leap into the unknown. And long story short, getting that first $150K check from Y Combinator is what gave me the confidence to quit my job and go have a real go at it. So crypto has gone through probably 4 or 5 of these cycles now, where people get irrationally exuberant and then it crashes down and they're too pessimistic. And so I always like to tell people, you know, it's never as good as it seems, and it's never as bad as it seems. You have to kind of look at the fundamentals of, like, you know, how many transactions are happening per day? What's the total amount of value locked up in these things on chain? And those are sometimes more true metrics than just looking at the price. One piece of advice I give to entrepreneurs in the crypto space is, if you haven't tried your idea through at least one cycle in crypto, you know, bottom to bottom or top to top or whatever you want to do, then you haven't really tried it. Because what a lot of people do is they start their idea in a down market, or they start it in the up market and then it goes down and they think, everything's over and it's despair, it's harder to raise money. But typically these cycles are something on the order of like 3 years. And so if you can't power through at least one cycle, you haven't really tested your idea.
A lot of people who focus on the often extreme volatility of the cryptocurrency industry as a reason not to buy crypto assets focus on the downside volatility, not the upside moves, which are just as volatile and awe-inspiring. If you don't invest in crypto assets because of the 70 or 80% drawdowns, you should at least consider the bigger upside moves. More importantly, whenever top crypto assets have had these huge drawdowns, they've somehow found their way back up. This is a huge feat that is completely unique to the cryptocurrency industry. In addition, not investing in alternative asset classes like crypto means being permanently stuck with traditional assets built on the shaky fiat system. As Armstrong pointed out in a December 4th post on X, currencies like the US dollar will continue to get debased until they are worth fractions of what they are worth today, which is already just fractions of what they were worth decades ago. Let's get back to the interview as the Coinbase CEO discusses his expectations for the 2024 and 2025 bull run.
Well, it certainly was very frustrating. You know, you saw a bit of this at the board meetings over the last few years, where we felt like, hey, we're taking a compliant approach, that's the right way to do it. But these offshore unregulated exchanges keep popping up. They're launching all kinds of products without KYC controls. And the products they're offering are illegal as far as we can tell. US citizens are going and signing up for these things. They might have had a US entity which they claimed was where US customers were going, but it was kind of an open secret within the industry that US citizens could relatively easily bypass KYC and wind up on on their main platform. So their US entity was kind of like a fig leaf for US regulators. And we kept thinking, this is not going to last. I mean, regulators don't always move super quickly, but they do eventually act, and it's going to be a very bad day. And I mean, that all came to fruition, so we were right. But I can tell you at the time, it was painful. I mean, we basically watched our market share just erode. Tens of billions of dollars of money just moved offshore to these platforms as they were moving quickly and breaking a bunch of laws at the same time. So in some ways, I think it's terrible for the industry that there's been now several companies that have blown up, and CEOs probably are going to be sentenced here in February. On the other hand, I feel like a real sense of pride that Coinbase stuck to its guns and, didn't take any shortcuts, had a long-term view. And I also feel like it's a moment for us to close this chapter, turn the page, if you will, on the Wild West craziness of these offshore unregulated exchanges, so that the many companies that are trying to build in this space legitimately can kind of have a level playing field to compete, and just that's how it should be. So the current state of crypto is, 2022, a lot of things, all growth stocks came, including Coinbase, came down sharply as interest rates went up, and then FTX blowing up had a further deepening of the crypto winter. We had to adjust our cost structure and all kinds of things to exist in that environment. Q2 and Q3, we got back to financial health, EBITDA positive, generated some cash, right-sized the business. And then just in the last 30 or 60 days, we've seen a big run-up in the crypto prices. So now I'm sitting here thinking, okay, maybe this crypto winter is starting to thaw. We don't know exactly what's going to happen in the future, but the ETF applications that have been filed, about a dozen of them by the biggest financial institutions in the world, is a huge endorsement. It's going to bring in new pools of capital. The enforcement actions, I think, have actually psychologically allowed people to turn the page and say, okay, justice has been served, the pain has been delivered to the market, and still we can grow from here. And then, next year, I think the move to layer 2 solutions is going to improve the scalability of crypto enormously. I think that's going to be a huge thing, kind of like moving from dial-up to broadband on the internet. I think there's a Bitcoin halvening next year. So my guess is that next year will be pretty positive. The emerging regulatory clarity, 83% of the G20 countries are working on crypto legislation now. So I think all these factors are going to lead to hopefully a good outcome next year for crypto. And we're just, our goal is just to kind of keep our heads down, keep building, try not to get distracted by the noise and the headlines. It's all very sensationalist. And just if we can just build good products for our customers and not do something stupid in the meantime, then I think we're going to be in a very good place.
As promised earlier in the video, let's quickly shift our focus to the latest rounds of scuffle between Coinbase and the SEC. On December 15th, in a post of X, Paul Grewal, Coinbase Global's chief legal officer, announced that the SEC had denied the firm's petition for rules for crypto. The petition, which was filed on July 21st, 2022, suggested that the commission had to engage in discretionary rulemaking of substantial scope to create a new regulatory framework for crypto asset securities. According to Grewal, the SEC refused to respond to the petition and only denied it after Coinbase went to court to get the response the law required. Here is Armstrong's reaction to the SEC's response. "We went to court to challenge the SEC's refusal to create clear rules for the industry, and it worked. A court compelled them to respond. Now that they've formally responded, with a no, we can challenge their response in court, which helps us get one step closer to regulatory clarity." Not surprisingly, Gary Gensler's reason for refusing the petition is that there are supposed existing laws and regulations that apply to the crypto securities market. The SEC chair also stated that the commission addresses the crypto security market through rulemaking, and that it is important for the commission to maintain its discretion in setting its own rulemaking priorities. It would seem that the cryptocurrency industry still has a long battle ahead of it before we get any reasonable regulations in the United States, especially if people like Gensler and Warren still hold their present positions. What are your thoughts on Armstrong's interview and the SEC's response to Coinbase's petition for regulatory clarity? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on pot notifications for more videos. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Geekastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.